Welcome back to the Dividend Diplomats YouTube channel. Got your boys here, Lanny and Bert, the Dividend Diplomats. Guys, we have 5 stocks here. You have to watch this video. Look at how we are looking at these 5 companies before you start buying shares of them.
Guys, hit that subscribe button. Give this video a nice thumbs up. Let's rock this video out, guys. Happy Tuesday morning. Let's get this video to 300 likes, and you can enter if you literally subscribe, like, and comment your favorite dividend stock pick in 2025. But Bert, what a fun video you've got planned for us here. These are some pretty large companies we're about to talk about.
Yeah, large companies, high-profile companies in the news a lot. 4 of the 5 are down big year to date, Lanny. 4 of the 5 are considered screaming buys. You see a lot of people on X buying them. So Lanny and I ran them through our screener. We're going to compare them to their average price to earnings ratio. And we're going to even bring in the price to sales ratio from Seeking Alpha, Lanny. Compare the current price to sales to the 5-year average price to sales. Really, the goal is this stock truly a value buy right now? Or even though the stock is down, do you just ignore the company?
Whew, man, let's dive in to see what value is out there. Bert, the first stock is one that you've been gobbling up every single gosh damn week.
Yeah.
It is technically not Google, but Alphabet.
I hate that. Ticker symbol GOOGL. You're right. We've invested over 5,500 now into Google between my wife's account and mine. Growing this position quickly. Going to run through the metrics here. That price to earning is 19. Payout ratio is 8.9%. They've increased that dividend once so far, probably a second time here. Their yield is 0.46%, down 8% year to date, up 26% over the last 52 weeks, up 186% over the last 5 years. Those are the high-level metrics here for Google, Lanny.
Up 186%. They're $2 trillion in market cap. Now that PE of 19 is well below their 5-year PE average, which is 26.5. And then the price to sales is at 6 times. And that 5-year average price to sales is also about 6 times. So they're trading right where they typically kind of are outside of the price to earnings ratio.
Yeah. So to me, that indicates everyone obviously throughout this video, do your own research, come up with your own price points. But Google, it matches the narrative. Price is down. What it appears to be undervalued based on its metrics. So if you're going to buy a company, Google, it at least is showing those value signs that you are seeing all over the internet.
Oh, but the next one, let's slide in, man. We're talking pretty much a couple of the Mag 7s here today, guys. But we are talking Jeff Bezos, Amazon, ticker symbol AMZN. Now, this stock is down 9.18%, so a little bit worse than Google. Trading at $199.25. That EPS projected is $6.33. That's a 31.5 price to earnings ratio. Caveat here is they don't pay a dividend yet. So that payout ratio is 0% with 0% yield. Again, they are also up 123% in the last 5 years and also sport a $2 trillion market cap.
But why are we talking about them? They dipped below that 200 mark. That's really what got the internet up in a frenzy over the last week. Their price earnings ratio is 31.48. That at 5-year average PE is 74. Yes, Amazon's PE ratio historically is out of control. Interestingly, price to sales 3.27, Lanny, a hair below that 5-year average price to sales of 3.37. So much like Google, price to sales is pretty much in line, but you see a major drop down of that 5-year average price to earnings ratio. So Amazon, same as Google, a little bit less of a discount. The metrics are a little bit wonky because that PE is so high, but they are at a sale historical to their prices. So Amazon, keep a close eye on them. I'm not buying them like Google, but it's matching the narrative of what you're seeing online right now.
Let's swing into another fun story here. That's almost $1 trillion in market cap. One that's also up 732% in the last 5 years. We're talking, no, not NVDA. No, not Meta. We're talking about Broadcom, ticker symbol AVGO. They are actually down 16% this year, but still up over 700% in 5 years. Trading at $194.26 with earnings expectations of $6.61. That's a PE of 29 times earnings.
Yeah, and they're even propped up by the fact, Lanny, they're down 15%, but they jumped up 8% this last day going through earnings. That payout ratio, this is going to be our longest 10-year dividend stock. Their payout ratio is 35.7%. That 5-year dividend growth rate is 14.41. increased that dividend for 14 years. This yield is 1.21%. That's Broadcom, everybody. Down, as you said, 15.91%, but propped up by 8% coming back. So they were down much more heading into the weekend. 5-year average price earnings ratio is 22.66, Laney. So their current PE ratio of 29 is well above that 5-year PE ratio. Price to sales is 16, above that 5-year average price to sales ratio of 10. So this one's pretty easy. Even though they're down 16% year to date, they are not a value. They are not matching the narrative that you see where Broadcom down. Is it time to buy? Not right now for us. And I would ask you guys to check your metrics too when looking at Broadcom.
Exactly, guys. All right, that was stock number 3. Time to get into stock number 4 with Facebook/Meta, ticker symbol Meta. Again, they're trading at $625.66. They are the one stock that is actually up this year by about 7%. Now, earnings expectations are $25.25. They are trading at a pretty decent PE at 24.78, but their 5-year PE is 25.75. So they're pretty much right there where they usually are trading at. Now, they did just increase their dividend about 5%. The dividends they pay per year is about 2.10%. They've increased the dividend for 2+ years, an 8% payout ratio, guys. Again, 1.5 trillion in market cap, currently trading at a price to sales of almost 10, when historically they're at about 7.5. So there's some value here, but just not as much as Google and possibly Amazon.
Yep, I would agree. You don't put them in the same bucket as Google and Amazon right now. They're in their own. If you're going to buy Meta, it's because you like the company and you believe in it, but you can't say it's a value right now.
I like the stock.
Yeah, you might. Last but definitely not least, NVIDIA, ticker symbol NVDA. It has been quite the year for them. They are down 16%, up 31% in the last 52 weeks, up 1,770% in the last 5 years. Yes, we all know the NVIDIA story. I don't need to beat that point down. But a lot of people are asking, are you catching them at a discount because of the DeepSeek news that shook the world, because of potential slowdown, that the growth might not be as exponential as we're seeing with competition coming up? So NVIDIA's retreated from those highs of in the 130s. They are back now down to 112, and that's what's really bringing them up here. Going through the metrics, that price to earnings is 25x. That's below their 5-year average P ratio of 63. Payout ratio is 0.89% because they pay a 4-cent annual dividend. They've only increased it for 1 year. So that yield is minuscule. It's 0.04%. It's barely a dividend stock.
Yeah, this is just hilarious stock. Again, yes. The 5-year average PE is at 64. So trading at 25, there's definitely more value there. Price to sales, even they're trading at 21 times price to sales, when historically they're at about 26. So there actually is some value with NVIDIA. But for dividend investors out there, you have to ask yourself, why are you buying NVIDIA?
Yes, and that's fair. It's more speculative in my mind compared to the other. But from this list, let's go through them. The 5 companies: Google, Amazon, Broadcom, Meta, NVIDIA. It just happened to was all tech. Those are the big ones that are popping up and catching everybody's mind in the headlines because everything jumped up on Friday. Of the 2, Google, Amazon are matching that narrative of they are on sale potentially. I personally am waiting a little bit more for Amazon, but right now I have no problem buying Google at some of these value prices.
There you have it, right from Bert, guys. Which of the 5 do you think is the most undervalued, and which one are you buying left and right here? Is it Google? Is it Amazon stock? Is it Broadcom stock, Meta stock, or NVIDIA stock? Let us know which one is your favorite and your pick in the comments below.
If you haven't already, everyone, subscribe to the channel. Give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bert the Herd and Lanny from the Dividend Diplomats. Over and out.